Hey, welcome to the Market Minute for the first week of September. I hope you all had a fantastic summer and you're looking forward to kicking off. Well, I like to call September the new year for myself. I treat this like the start of a new year for business, at least. And hey, the sun's still out, it's shining. Summer's not quite over yet, but time to kick it in gear if you're in the business mode. Some interesting news. By the time you receive this, you will already know whether the Bank of Canada chose to raise rates today or not. So I'm going to go out on a limb and say they did not. The September announcement is widely expected to just stand pat with no increase. However, they are expected to look to cut rates in October. The next meeting for the Bank of Canada is October 30th, and it looks like they've laid the groundwork for a rate cut in October. It's kind of part of easing the economy to get the economy going. In Canada, actually, our economy is not doing too bad, but south of the border and globally, there's a lot of things going on that would indicate we may have potential challenges on the horizon. So the Bank of Canada is widely expected to follow the Fed example and lower interest rates. Speaking about lowering interest rates, take a look at this. The bond yields are as low as today to 1.17. Previously, they were up to 2.48. When bond yields go from 2.48 down to 1.17, that means your long-term fixed rates will probably follow suit. That's why we've had a consistent downturn in your long-term 5-year fixed rate mortgages. So again, interesting times. Rates are coming down. Should be easier to get mortgages from a qualifying perspective, but the 2% stress test is still there. In the meantime, how's all this playing out in the stock market? If you have mutual funds and RSPs and TFSAs, I really want you to pay close attention to this. A lot of portfolio managers, these are the people that would run your mutual funds, for example, are suggesting it's time to move to cash or bonds. Here's an article that's suggesting that it's time for funds to cut their exposure to equities. This was an interview with, or a poll rather, of 40 wealth managers and investment officers around the world, and they are predicting a 45% chance of a significant correction in the stock market. Now, I'm going to tell you, I do not have a crystal ball. I'm not trying to suggest what's going to happen, but those managers are suggesting a 45% chance of a market correction. Here's another article that's suggesting how the uber wealthy can shield against a recession. So there you have it. They're using the R word. One article is saying the 45% chance of a correction. Another article is saying, okay, if there is going to be correction or a recession, how do the uber wealthy, the ultra high net worth individuals protect themselves against this? So here's an interview with a Toronto-based investment officer. Mr. Jansen is his name. And Mr. Jansen works for a Toronto-based West Court Capital Corp. They basically a company that deals with ultra high net worth individuals. And again, he's saying he doesn't have a crystal ball, but he'd rather make adjustments a little early than be too late after the markets have already corrected, and be proactive to try to prevent his clients from losing money in a downturn. He said the key for high net worth individuals is to diversify. But he goes on to say too many Canadians have their eggs in one of two baskets, stocks or bonds. Most mutual funds are a combination of stocks and bonds. That's just the nature of how they work. Whereas high net worth individuals should be thinking about all asset classes, not just stocks and bonds, but also private equity, private debt, real estate equity, hedge funds, etc. So this is something I've been saying for a long time, and that diversify alternative investments, that's exactly what we work with, is alternative assets. So again, if you'd like to learn how to invest the way the ultra high net worth individuals do, if you'd like more information, or if you just like to have a conversation around your portfolio, where are you at, what you're invested in, and have a conversation around what your alternative options are, please give me a call. Call us directly at the office or send me an email to peter@peterkinch.com. That's peter@peterkinch.com. Hope you're having a great week and a great start to your September new year. Look forward to working with you all and have a fantastic start to September. Bye for now.